This week, the FarrCast is back with a full slate of guests and featuring first-time special guest John Ritz of WCSmith, a large D.C. property manager. Michael and John discuss the policy challenges facing property owners and the difficulty of creating affordable housing. Dan Mahaffee takes us around the horn from the East Wing to Bibi setting, and we kick the show off with Jim Lebenthal, who remains bullish. Now to your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us again this week. It is the 23rd day of October 2025. Here we are rolling into the fourth quarter. Earnings season has been really pretty good. Markets still trading at near all-time highs. The 10-year Treasury has dipped below 4%. Cryptocurrency has pulled back. The dollar has gotten a little bit of strength. Oil continues to be weak. All of those signs indicate that things are okay. Things are okay, but they're not the signs of a global expansion, an economy that's growing around the globe, or fabulous demand, or a lot of great positive animal spirits. It feels much more like a carry through and follow through of what's been remarkable momentum that's continuing things higher, keeping things higher for now. And just this week, in the first few days of this week, and probably Friday too, as I think back onto last week, it feels like maybe we're seeing a chink. Maybe there's a bit of a crack here. Maybe the animal spirits won't be enough to keep things up, and maybe we will have some sort of a pullback. Of course, pullbacks are normal. We expect them, we dread them, but we endure them if we're to be successful about what we do here as investors. But I'm just trying to take a look at what's going on around the world and in the U.S., and with this shutdown that's beginning to probably kill the buzz, if you will, kill the buzz. We're hearing that SNAP recipients are really going to suffer here. This is welfare, is what we're talking about. The food program, food stamps, now called SNAP. We made it all sound a lot nicer. It's the same old thing, but people rely on it, and children rely on it, and so policy is now going to get to the human level, and there is some suffering already, and that looks like it will increase if this continues as politics continue to be postured and played. So what will we do? We will ignore the noise. We will look to our discipline. We will pay attention to the numbers. We will stay the course and keep our heads as others lose theirs. And when we need a bit of support, we call Jim Lebenthal. That's what we do. What do? I get a little nervous. I call Lebenthal and say, okay, now what am I going to do? Because, of course, we listen to Lebenthal, a partner at Cerity Partners, a face and voice of CNBC. And he's got a new book coming out. This is going to be very exciting. Jim, welcome back to the FarrCast.
Michael, so great to be here. Thank you for the kind introduction and the plug for the book, which still has a few months to go. We're in the birthing stages.
It's riding the subway, taking the subway.
It's going to be called How to Ride the Subways.
How to Ride the Subway. And it's still a book on investing.
It is. So it's using my personal love affair with the New York City subway system as a metaphor for investing lessons and lessons in how to get along in business.
Your personal love affair with the New York subway system said no one ever, I think. So that in and of itself is going to be worth the purchase, ladies and gentlemen. That's going to be great. Jim, you heard my cautious opening that perhaps we're feeling a bit toppy here. You agree? You disagree?
Well, I'm going to focus on the word that you said, that some cracks may be forming. And
Yep.
The way that I'm looking at the current situation in the financial markets and in the economy is that there is a tremendous pot full of opportunities. And on the other side, there's a tremendous pot full of risks. I mean,
Yes.
both sets are large. If I think about the opportunities, I think about the power of the budget bill that's been passed, particularly as we get into 2026. I think about the Fed cutting rates. I think about the strength of the economy right now with GDP growing well over 3%. I think about deregulation. I think about a lot of things that can go right. But on the other side, there are risks and they're substantial. Probably top of the list for me are these corporate bankruptcies, which Jamie Dimon, as usual, had his bon mot, and it was very bon last week or 2 weeks ago when he said, when you see one cockroach, there's more than one. Lo and behold, I think in the last 24 hours, there's a third automotive bankruptcy that has happened, again in the subprime lending space. So you kind of want to wash it away for that. But you have to be careful of the risk of bankruptcies. We're paying close attention to credit risks, but those aren't credit spreads, that is, but those aren't the only risks. You mentioned the shutdown. How long does that go on? And does it have an effect on the economy? How strong will the AI trade be as earnings come in later this month and into November? That's a very incomplete list of risks. But my point being is you don't want cracks to get bigger because that would imply that the risks are winning out. Now, where I am right now, I think the opportunities are greater than the risks. And it simply comes down to earnings, which have come in better than expected so far. The next 2 weeks, as we start to get tech earnings, that's what's really going to matter to give all of us encouragement that the opportunities outweigh the risks.
Yeah, I've got and opportunities outweigh the risks, says Lebenthal. But it sounds like, Jim, you're saying you have to pick your spots, that this is no longer a shotgun blast approach to investing. Is that correct?
I think really what I'm saying is pay attention to the risks. Okay, so be looking at credit default swaps on banks. What we're seeing in Jefferies, a little disconcerting, but it's only
Good.
one bank. Pay attention to bond spreads, to high yield spreads. They're very low right now. I mean, if you look at them, you're going to feel just fine, and that's great. But let's make sure that they stay there. In terms of your question, though, actually, I feel this broadening rally can continue to broaden and maybe, dare I say it, be a tide that lifts all boats, meaning go ahead, keep your tech stocks, but also
Is,
go ahead, keep your equal weight S&P 500 with your financials, industrials, and healthcares.
is this the feel like the beginning of the top of a blow off stage of a bull market where the momentum continues higher and the risk is being out, but the valuations may not warrant the sort of gains that we're seeing?
So the answer to your
What
question,
you may or may not hear, ladies and gentlemen, is I'm arguing with him. I'm just doing it in a really nice way.
well, you're doing it in a nice way, probably because you and I are seeing this similarly, because we all are seeing this similarly, which is to say, this will eventually end in a bubble that pops. I'm sorry to say that. I don't like saying that, but I mean, that's human nature going back centuries in the financial markets. But we're not at a stage where the bubble is going to imminently pop right now. The bubble needs to be inflated, frankly. So your words, I may miss paraphrase them here, but I think you said, "Are we at the beginning of the blow off top?" Yeah, kind of. Guess what? That blow off top can last for a good long while. And consider that if earnings come in better than expected, then this so-called expensive market may not be so expensive.
Okay, I've got two things I want to do, and then we're going to go. I got to get you to two things. There's been a lot of talk and a lot of writing about the risks in private credit. Private credit's the big boogeyman out there, and I'm trying to think about what it means. I remember going back to the great financial crisis. We had SIVs, which were these special investment vehicles, which turned out, I was on television when they first asked me about these things, and it's billions of dollars of off balance sheet loans, and I'm thinking, wait a minute, a bank has billions of dollars of off balance sheet? I've never heard of it before. And typically, ladies and gentlemen, I'm not stupid about this stuff, and I'm not particularly unsophisticated. So stuff creeps in, right? And when they start talking about, you can hear about back at those days, well, there are subprime loans. Subprime loans. I knew what that was. Credit default swaps. I had no idea what a credit default swap was when I first heard about a credit default swap. So what's with the private credit thing, and should this be a canary in the coal mine, Jim?
I think it's too early to get worried about private credit. Now, it's not my area of expertise. I will admit that at Cerity Partners, not admit, I will just say that at Cerity Partners, we do a mean business in private credit, but not my area of expertise. All that said, it does matter. Let's face it, that private credit has taken over what traditional banks used to do 20 years ago before a wave of regulations after the great financial crisis kind of pushed them to the side. But if we're going to worry about a credit crisis, whether it's in the traditional banking system or private credit, I frankly find it's hard to do it in a condition where GDP is growing at well over 3%. The Fed is cutting rate. We've got a presidential administration that is fairly pro-business. We might get some wind in the sails from trade deals if they come through. So it's kind of, look, as I said, I'm paying attention to what I consider the canaries in the coal mines, which are these bankruptcies that we've seen and watching high yield spreads, that sort of thing. They're not showing signs of danger yet. And the last thing I want to say, without being either overly glib, nor do I in any way want to cry fire in a crowded theater, is that there is an awful lot of dry powder in the private credit space. So I speak to a lot of these guys in the private credit space, and some of them are kind of salivating about the idea that maybe some of their competitors will get into trouble, and they can come and swoop in and do some vulture investing.
Okay, we're hearing from a pretty optimistic Jim Lebenthal this morning, and that's nothing new. And by the way, Jim Lebenthal has been right. Jim Lebenthal has been right in being as bullish as he's been and he had to lean in hard for a few years there too, folks. They were just nailing him. They were crucifying him. Scott Wapner, I think probably just ran out of bullets after a while. He kept shooting at Lebenthal day after day. Okay, Jim, I want to go here and then I got to get out for today. My market commentary that we send out from Farr, Miller in Washington every week, which is free, and you can just send Harry a note and you'll be put on our list at hjennings@farrmiller.com, hjennings@farrmiller.com. This week I'm writing about the Mag 7, and those are those big tech stocks, folks, mostly. NVIDIA, Apple, Microsoft, Alphabet, which is Google, Amazon, Meta, which is Facebook, and Tesla. Everybody has to change their name to something cool, I guess, these days. 35% of the S&P 500 is 34.4%. I'm rounding up. 34.4% yesterday of the S&P 500 is in seven stocks. Now, I'm going to do the math in my head and say, therefore, about 65% is in the other 493 stocks. So you're not really getting a diversified portfolio if you're going to switch into the S&P 500. So, Jim, tell us about this concentration. You said at the beginning, and I was listening, that you may consider owning the equal-weighted S&P 500, which, if the Mag 7 keep running, will underperform for quite a while, won't it?
So the equal weight S&P 500, and by mentioning it, is a clear implication that one of the ways to clear this concentration that you're talking about is for the rest of the market to catch up with what the Mag 7 have done. Now, that's been a call that I've made for over a year now, and it's happened in fits and starts, but it hasn't been consistent. Basically, it's a way of saying, hey, financials, industrials, materials, and energies might be able to outperform those Mag 7 going forward. Doesn't mean that the Mag 7 have to come down. It just means the rest of the market can do better than the Mag 7. And that's what the call is. And that's why we do have, and I believe we should have, a weighting in the equal weight S&P 500.
Got it. Jim Lebenthal, final word for Fred and Ethel, and we're out. And by the way, we're going to have Mahaffee, and then we've got a great guy coming up. John Ritz is coming up. This guy manages properties, a whole bunch of them across Washington, D.C., and they're seeing real pressure from workers not showing up because of ICE, and property values are beginning to really flag in Washington, D.C. So we're going to be talking about that on the FarrCast today, too. But anyway, Jim, please, final word to Fred and Ethel, who are sitting there biting their fingernails, but happy about their 401ks.
You know what I'm going to say. I mean, everybody's always saying, or right now is very much saying, doesn't the market have to go down? Can't it, how can it keep going up? Michael, you and I don't know the answer to that, but we do know the answer is that whatever the market throws at us, staying in the market in high quality stocks is the way to make money in the long run. Trading stocks, some people are good at it. I'm not. Market timing, I don't think anybody's good at it. I really don't. So please don't fall for the idea of, well, it's high, I'm going to sell and I'll get back in when it's low. The key to making money in the stock market is being in it for the long run in high quality names.
That's it, ladies and gentlemen, from Jim Lebenthal, Cerity Partners, and we say, listen to Lebenthal. Jim, thank you so much. We're coming back with Mahaffee next on the FarrCast.
Thanks for being with us on Season 9 of the FarrCast. And now, political analyst Dan Mahaffee and your host, Michael Farr.
Welcome back to the FarrCast. Great segment with Jim Lebenthal. I really like his continued bullishness, even though I am very concerned about his continued bullishness. How long do you stay invested when the water is really starting to get bubbly and boiling around you? And will you know when to get out? The answer is no. So stick to your discipline. Make sure that you don't have too much risk creeping into your portfolio, no matter whether you feel bullish or bearish or anything else. Don't worry about how you feel. Pay attention to those numbers. Dan Mahaffee is the president of the Dr. Scholl Foundation, president of the Dr. Scholl Foundation. He is a scholar at the Center for the Study of the Presidency and Congress, a Washington, D.C. think tank, and the senior political analyst on the FarrCast, now in Season 9. Welcome back, Dan.
Thank you. Good morning, Michael.
We missed you last week, but I made up what you would have said anyway. And I don't know. I think I got rave reviews for my channeling of the real Dan Mahaffee. I think you need to be the real Dan Mahaffee, by the way, on like X or Twitter or whatever we call that thing now.
Yeah, whatever it is now. Yeah, I'll take that handle in the future. But I'm sure you did better than whatever jet lag gibberish I would have provided had I been there. But it was a good trip to Japan and interesting. Now, of course, they have their first female prime minister. You know, is she Japan's Margaret Thatcher? That's a question to be seen. We have a lot of talk about her policies, very strong, hawkish on China, pro-Taiwan, and very eager to meet with President Trump before he meets with President Xi.
Does she have the same kind of conservative, plain-spoken sort of approach that Margaret Thatcher would have had? Would she be that sort of a conservative?
She is, and I think among the Japanese, she's really seen as, to use their words, as they still say, a tomboy. So she gets along in a very boys' world of politics. You know, they love the fact that she, in the 90s, she drove a Toyota Supra sports car. All those things sort of play into her persona as a politician. But again, she's seen as very strong on these defense matters, invigorating Japan's economy, reform, questions like that. So there's the historical parallels. The major question mark is, will she have that same rapport with President Trump that the late Prime Minister Abe had? Because again, if you're following the Thatcher comparison, that Thatcher-Reagan friendship was so critical to their success as politicians. Will the Japanese Prime Minister, this new one, Takaichi, be able to have that same rapport with President Trump?
These relationships are very, very important, and we will wish the new Prime Minister the very best. She has a crucial role right now in world politics, in global politics, that she could really unify and provide an enormous amount of leadership in Asia and help unite a lot of support, I think, for the U.S. agenda and perhaps the Western and NATO agenda. I think it's very important. So we'll continue to wish her our very best. Dan, the shutdown continues, and we are hearing that the SNAP program is going to run out of money to provide food to the poorest of the poor. We've got a segment coming up in our next segment with a guy named John Ritz, whom I've known most all of my life. He's been a 50-year Washington real estate manager of all sorts of properties, and he's telling me that the combination of ICE and DC policy is ruining the low-income housing market, and that people who had been active in that market are walking away from their properties because delinquencies now are like 18 months for collections and evictions. and losses are in the millions of dollars, and people just can't afford to have a lease that can't be enforced. And the poorest of the poor are going to suffer again in Washington, D.C., not to mention the fact that the values of all of those properties are beginning to drop. So there are consequences for all of these policies. Would you start with the shutdown and maybe perhaps touch on ICE? And I want to get to the ballroom, and then we need to get to Russia as well.
Sure. Quite a ways around the horn we go. First of all, with the shutdown, how do you get out of this? We've said again, if it's not President Trump getting to a deal, the only other way out of this is really you have the Senate Republicans break the rules or change them, however you want to look at it, to get it to a 50 vote, get rid of the filibuster on the budget, and then from then on they could pass whatever resolution they would like, probably get a continuing resolution for the Senate. But to be clear, we would be basically taking down the last vestige of any requirement of bipartisanship in the Senate, and you'd be setting that path to, again, 50 vote budgets down for the future. So that's the path out of this. Again, each side is digging in, and you talk about SNAP. No one's really seeing the pain points as more than saying, look, haha, the other guy, and no one's getting back to the table yet. So I don't see this resolving yet unless President Trump himself decides to break this, or it reaches the pain point where Senate Republicans say, fine, we're changing the rules in the Senate. But I think a few more weeks before you see either of those. And again, as you say, it has this impact on the wider economy. You see it in the workers who aren't getting paid. Look, they're trying to get around it with different fixes for the military, for air traffic controllers. But you're seeing this. You're seeing it in the call outs. You're seeing it in the people who aren't able to make their ends meet. And I think all these things, Michael, to get to your point about the economy, and what we've talked about it is, look, the trend in the U.S. throughout the first Trump term, through the pandemic, the Biden, again in the Trump administration years, second term, we have constantly talked about the K-shaped economy.
Yes.
That has not been going away, that underlying shape of the economy, that K-shape. And that's the question about public policy. Public policy can do a lot to exacerbate that or remediate that. But we also saw during the Biden administration, the policies designed to remediate that come with an incredible cost and inflationary pressure. So these matters of discussion, we're seeing the back and forth. I think the biggest problem is not that we are putting policies one way or the other. It's the whipsaw back and forth and the lack of predictability for anyone who wants to invest in new housing, new investments, new programs, be it tariffs, be it ICE raids on your workforce or your tenants, be it all these things. It just creates unpredictability. And I think that finally circles back to a message that we got in Japan, which is, what are U.S. policies going to be if we do settle into, again, these cycles where everything changes every 2 to 4 years wholesale just because our politics are whipsawing back and forth?
Dan, they say the difference between a pessimist and a realist is whether things actually go to hell or not. You're suddenly a realist if, in fact, everything does go to hell. President Trump, I have said several times, is the most powerful president I've ever seen in my life. The most powerful president I've ever seen in my life. I think he's also one of the most politically astute. He reads the polls. He wouldn't be in this position of power if he were not as astute as he is. So, when do the poll numbers get him to the point that he tells Mike Johnson to get her done?
I think we're reaching near that, but it's a couple more weeks of pain. And again, Michael, what is that pain? It thinks you're going to see it when people start to see the SNAP, the EBT benefits get cut off, and you're going to see it when they start to get these premium notices of what the costs are going to be for health insurance. And as you say, President Trump, Mr. Trump, is the most powerful president we've seen and the most politically astute. It's when he starts to feel the blame for that, and I think it will be within a fortnight that you start to see some of these negotiations move or adjust. But again, you come up against one of those other forces, which is how does this president, and you see him do it, but it's rare that he changes course, but how he shapes it, how he frames it will be important as well.
Oh, come on. He's gonna come in and he's gonna come in at the last minute when everything's going to hell, and then he's gonna say that he saved it. That this couldn't have happened without him, that he navigated this perfectly. And I mean, you know
Well,
exactly
to
what
be
he's
fair,
gonna do.
Michael, then he could have done that and should have done that yesterday
No,
by
he couldn't have,
by
Dan.
just
No.
no, because he could have done that by simply taking the Democrat subsidies that they want, which he knows that they need to do, saying that they're the Trump subsidies now, and go forward with this plan, and he would have completely disarmed any argument Democrats have on this issue.
I rarely disagree with you. I rarely disagree with you, but uh, he's still going to do that. That's exactly what he's going to do. But he doesn't have enough of a headline yet. He doesn't have enough people crying in the streets. He doesn't have enough wailing. He's got a full media cycle still left to go on this, to be completely cynical about it. But watch, if any of his behavior is different than what I'm suggesting it's going to be, go ahead and point it out to me, folks. Send me the cards and letters. But he's going to let this go to his greater political advantage because he's getting more. He's getting more headlines. Get the quickly. I've got to get through this quick today.
Yeah, sure.
The ballroom, the White House ballroom. Look, I've been in the East Wing. I've been up in the First Lady's offices. Was there with Anita McBride. This was like these offices, the First Lady's offices, and her chief of staff and her whole staff, which she has a huge job, really. Takes a lot of organization and coordination and a lot of political implication that has to be coordinated with the West Wing. This was like being in your grandmother's attic. If your grandmother had a farmhouse that was built over many years, little hallways, little rooms, little cubbies. I mean, there was
Yeah,
nothing.
Michael, the only smaller offices I recall seeing in U.S. government service are on our Navy submarines.
Yeah, you got
So
it.
look, that the White House needs modernization and change is without debate. Plenty of presidents want extra space. They need the space. They want new venues for entertaining. I get the benefit of all of this. I think the absence of discussion, the absence of a consensus on this for, again, that this is, the House that represents the executive of the United States of America, not just one person or administration. Yes, we needed the change, but not like this.
Mahaffee, I love you. You know that. But we had every bit of consensus you needed in this administration, which means Donald Trump was for it. There is consensus. And when he says it, no one stands against this guy. Watch what Congress is doing. Watch what his staff is doing. Watch his cabinet show up for every TV op. Nobody's there's not a discouraging word against this president coming from anywhere. And if there is, you're taken out at the knees. I'm sorry, this guy is amazingly powerful. So while I appreciate very much what you're saying, I think the reality is actually different. It's just if he says so, that's it right now. And that in a democracy scares me. That's not a political comment, ladies and gentlemen. I'm not saying that's not pro or anti-Trump. That's just if we've got a democracy and one guy rules universally, that's not a democracy. So I'd like to see more process, and I'd like to see more debate and more discussion. Anyway, I'm pretty sure Mahaffee would too. Do you want to go ahead and disagree with me about that, or?
No, you're exactly right in how the process went. And I think to get to our earlier theme, you're the realist and I'm the idealist.
Well, that's why I started saying that I love you, Mahaffey, because I too am an idealist. But these 64 years in Washington D.C. that I've had, I don't know. These are not rose-colored glasses.
No,
They're
but this is
rather.
also, again, it's a fundamental question about the presidency, and we've seen presidencies throughout our time
Yes.
studying them as well, that the office, no matter how intelligent or capable the person is, no one person can handle all those decisions, be it from deploying tomahawks to the level of chintz in a ballroom. All of those filters and decisions need to be made at various levels of government before they get to the president. But now what we see is the model where all those decisions come from the Oval Office, and then everything beneath operates as it would under a one-person rule.
Yep. Okay. Dan, what's going on with Russia? It looks like President Trump has taken some material steps against Russia, at the same time taking away tomahawks. What's going on? Give it to me quick, and I want to get
Look,
to.
I think the tomahawks were much more of a negotiating chip than anything you would have seen the administration actually send to Ukraine, but they're hitting them with the sanctions. I think it continues to show that the president is tired of Putin's rope-a-dope attitudes. And I think, frankly, too, that as the Russians delay, why are the Russians delaying? Because they see themselves as the winner. And if the Russians are the winner, I think finally the advice is getting through to the president that if the Russians are the winner, Mr. President, you are the loser.
I hope that's getting through to the president, because I know he's not going to like being cast as the loser, not even a little bit. And it sure strikes me, in my opinion, that President Putin hadn't given up Jack throughout this process, and continues to kind of plod on no matter what he says, rather in pursuit of his agenda, undaunted. All right, Dan, quickly, with this new Japanese prime minister, tell me, China cares, doesn't care, and Israel seems to be still making great progress, and we got to go.
Uh-huh. Look, I think China, it's the question of what is actually up for this negotiation. Look, we're going back and forth on rare earths from them. The latest from us is restrictions on software. All these things are back and forth, I think, putting out different bargaining chips before this. The big question mark for the new Prime Minister of Japan will be, is Taiwan itself a bargaining chip in these discussions? And I think that's the biggest fear. It would be that President Trump cedes Taiwan for some kind of trade deal. And I think there the metal needs to be stiffened by saying, look, Mr. President, if she gets Taiwan, you'll be seen as a loser too in Asia. So I think that's the part there. On Israel, the ceasefire is holding, but let's be clear. They had to send J.D. Vance himself to go to Israel to make sure that the ceasefire held. And one person referred to it as Bibi sitting. Look, what the administration is going to have to do to keep the Israelis from blowing up this ceasefire in light of provocations from Hamas and other terrorist groups will require a lot of political capital by this administration to keep the Israelis on side.
Dan Mahaffee is the president of the Dr. Scholl Foundation, scholar at the Center of the Presidency in Congress, and the FarrCast senior political analyst. Thank you, Dan. We're going to have you back next week. You're the best.
Thanks, Michael. Take care.
Stay with us for Mr. John Ritz from the William C. Smith Company. Figure out what's going on in real estate when we come back on the FarrCast.
We appreciate you listening into the FarrCast this week. And now to introduce this week's special guest, here's your host, Michael Farr.
Welcome back to the FarrCast. I am Michael Farr. All right. Two terrific segments this morning. We had Jim Lebenthal, I really thought very interesting, continuing to be bullish on markets, continuing to think that we'll have a melt up and markets will expand. And then Dan Mahaffee explaining the dysfunction on Capitol Hill. Nothing entirely new there. What's going on with Russia? Maybe what's going on with China? And also the big new ballroom at the White House, the big new ballroom. Very controversial, very interesting, but I spent a fair amount of time, believe it or not, in the East Wing. I've been up in the First Lady's office years ago. My daughter Maggie and I went in, and we had a great visit with Anita McBride when she was running Mrs. Bush's office, and she was the chief of staff to the First Lady. It was a great time. So that was fun to talk about with Mahaffee too. Now, joining me now, a FarrCast first-time guest, but like one of the coolest guys I've known for most of my life. John Ritz is the president of William C. Smith Companies, which is a property management company and developer and real estate company in Washington, D.C. They have over 10,000 residential units in the Washington, D.C. area, commercial properties, retail properties. They do all sorts of real estate. And John has been the president of this company for over 50 years now. He went to Villanova undergraduate, where he played baseball, and a star baseball player, by the way, ladies and gentlemen. And then AU for his MBA, a voice of wisdom and an expert's expert in real estate. John, welcome to the FarrCast.
Good morning. Good to be with you.
Good morning. John, we're very eager to hear about the real estate market, what's happening in Washington, D.C. Give us your perspective over the past 5 years. We've got about 8 to 10 minutes for this segment, but love to hear what you're seeing, and then we want to talk about the effects of ICE and policy and things, and I'll ask you about those things. But give us your broad view right now. Healthy, unhealthy, growing, what's going on in D.C.?
Well, our focus is mostly in Washington, D.C. proper. So we do some business in Maryland and used to be in Virginia, but I'll speak to Washington, D.C. itself. It's a challenge. I mean, COVID era, we're still in the COVID era, whether we want to call it that or not. The political arm of DC has made a mess of things, and we are struggling to survive on many fronts. And we have a heavy affordable housing presence. About a third of our portfolio is affordable, either through covenant like LIHTC or just naturally affordable because of its rent. Collections have decimated that side of the business, and it is a real crisis of affordable housing in Washington, D.C. What do you mean
collections have decimated that side of the business? What does that mean for our listeners?
Well, let me give you an example. So,
I mean, what's the problem with collections?
Well, it starts with the legal collection process. So during COVID, many new regulations were instituted to protect tenants from displacement. Understood. We were in a crisis and we were trying to deal with the facts on the ground. Today, as we've normalized, they haven't changed those. There are some efforts now to moderate some of the things that were done. But let me give you an example. So pre-COVID, if we had to bring someone in for a legal collection process to the courts in DC, it would take 90 to 120 days from start to finish. Now it's 18 months.
Wow.
18 months.
Wow.
Last month alone, we wrote off $1 million in uncollectible rent. 1 month.
Wow.
In all of 2019, the year before COVID, the entire year for our portfolio, we wrote off $1.5 million of uncollected rent.
Jeez.
We did that in 1 month.
And that was 1 month. And now, do you think you'd be on pace for $12 million this in the next 12 months?
Trailing 12 is about 9 million right now.
Wow, trailing 12 is 9 million.
And most of that is affecting the affordable housing community to the point where we, who are just a for-profit developer who've been in that space since the early 80s, have to exit it. It's left to mission-driven housing providers who, by their very nature, they're nonprofit and they have a mission to try to provide that affordable housing. Even they can't sustain themselves any longer. One of the oldest affordable housing providers in Washington had to close its doors in the fall. Another just declared bankruptcy on 2 properties. A third is selling their entire 1,000 unit portfolio.
Wow.
So it's a real crisis here in Washington.
And let's play this out for a second, John. So when that happens and a company like yours exits, suddenly what happens to those buildings and when people stop, I guess, maintaining them? And what happens when what I'm trying to say is I think the victims are ultimately the people who benefit from those low cost properties, right? I mean, suddenly they're not there anymore.
That's correct. Absolutely right. People have to walk away. I mean, literally, there are cases here in Washington of people that I've been in the business with for nearly 50 years who have just walked away from properties. They cannot sustain themselves.
And that they're not paying the mortgages, and they, in real financial crises and in recessions and things, the bankers, talk tongue in cheek about jingle mail. they get jingle mail, which means the keys to the buildings and the properties are just returned in envelopes where they say, I'm not paying anymore. Here, keep the building.
Right.
Is that what's starting to happen in these commercial properties and low income?
That's starting to happen. And
Wow.
if
Wow.
not, if not, then they're trading at values that are 30 and 40% under what they were trading at. So that there's a tremendous amount of value that's being lost.
That probably bleeds into the other properties too, right? I mean, the not low income, but all of a sudden, those value depressions have to be happening to that has to bleed over, right? That has to metastasize in other properties. I don't know if it goes to the very high end apartments and condos, but it's got to have some effect, doesn't it?
I would say it's minimal. I really think
Okay.
it's a targeted problem. There is some bleed over just because you're dealing in an entire market, and perception is reality in some cases to people as they look at what are the challenges. But these challenges that I'm suggesting for the affordable community are very targeted
Yeah.
and really in hurting the people who need it the most.
Yes.
These are very thin deals to begin with. These are, as I said, many often are mission driven by nonprofits because they're trying to provide something for a class of folks who need decent housing. But,
Yes.
if I'm charging half the rent on an apartment that I might in another part of town, I pay the same amount per gallon of water. I pay
Right.
the same amount per therm of gas. I pay the same amount for a kilowatt of electricity. So all of the expenses that are going up in every community are borne even more, becomes even more difficult in those communities that have affordable housing rents. So how do you deal with that? Well, the public policy is to try to help by bringing down the development costs so that I'm not carrying as large a debt to help offset the fact that my operating costs are just as high. And frankly, they're actually higher in many cases, but my income stream is lower. So how do I do it? Well, through LIHTC and other reasons, we bring capital in ways that are non-traditional. And that makes it affordable. That makes it work. It all predicated on the fact that people are going to pay their rent and they're going to be good citizens in the community. And that's not always the case. These are challenged communities often, but the public policy has to support it. And the public policy has done just the opposite in DC.
Well, if there's no consequence for not paying rent, and it's going to take 18 months to process an eviction for someone who stops paying their rent, then lots more people are going to stop paying their rent. I mean, it seems, is it just that simple?
You're elected.
Yeah, I got it. Great. I got it. Great. So, John, if I am one of those big pension plan real estate investors, an institutional investor with a portfolio, why would I buy any building in Washington, D.C. if I can't enforce the lease for the rent?
That's the challenge. We have talked to many nonprofit, mission-driven housing providers who have said to us, quite frankly, my pencils are down. I don't look at a deal in DC.
That's it. And therefore, property values are falling in DC because of this policy, yeah?
Correct. On the
Okay.
affordable housing side, correct.
You and I were having a discussion, and really, I'm so glad we got you on. This is fascinating. And it really does. We were talking to Jim Lebenthal in our first segment about private credit and where we might see cracks in the economy and markets and things. This is a real crack in the economy that people aren't talking about. We're hearing about it on the FarrCast, which is terrific for all of our listeners. But you were also talking about having some trouble getting repairs done to buildings and roofs replaced and things in and around the district because of the pressures of ICE and work crews not wanting to come into the district where they felt threatened. Even legal workers don't want or are worried about being harassed and arrested. Can you share some of those anecdotes with us?
Sure. Well, again, I've run our property management division since the mid 80s and been with Smith nearly 50 years. So I've seen a lot of different economic times from savings and loan crisis on through. But never have we had a time where we couldn't get people to provide the services that we need. Again, we buy goods and services all day long. We probably spend over $80 million a year on goods and services to provide homes for people in apartments.
Wow.
Now I'm finding out from contractors, they're telling me that their workers, because of the way ICE is enforcing things, where they're just pulling truck vans over with people of a certain profile, that even those that are legally here and working legally, they don't want to come into the district because they fear the unknown. They don't know, even though they have their paperwork and maybe they're even citizens, but they don't want to go through the process where they have to be stopped and questioned. And we had one job where we're a land developer for a townhouse community, and I won't name the names, but a major national developer is doing the building.
Right.
Started the first string. I showed up, took the entire framing team away. There were 20 men working, all gone. I don't know, they're subcontractors, so I don't know the situation of those individual men, but ground that to a halt. They have to go find another framing company to come in and start doing the framing.
Do they, has it reached the point where they have to pay those? Has it reached the point where they have to pay those guys more yet?
Not sure about cost, but it's inevitable that it would. It's
Yes.
you'd almost have to pay a risk premium to have people come and work. Others, example, I had a roofer who had a job. I called him when he didn't show up. He said his entire roofing team was stopped and arrested on the way to the job. They were taken away for processing. They may be released. He said, as far as he knew, he had already checked their legal status before they were hired, but it's the interruption.
So wait. It's likely that most of the folks, if not all, were indeed legal, and yet they were all taken away and detained under suspicion and kept from earning a day's work. I guess because of they met the profile of who ICE would stop, huh?
Yes. I mean, we're hearing reports on major thoroughfares in and out of the city, like Interstate 295 and Rhode Island Avenue and 16th Street, New York Avenue, where they're just pulling over white vans, work vans, and just checking everyone coming through. So a lot of the people tell us now they're driving back roads to get to their jobs. I mean, it's a very unhealthy climate, and I think we're going to see more and more effects because of the types of services that we purchase almost every day, whether it's landscaping, cleaning, repair and maintenance. There are a lot of trades that are involved, and people are saying what we're hearing from contractors in their hiring problems is that people don't want to come into the district to work because of fear.
Ladies and gentlemen, we're not making political comments here on the FarrCast.
No.
We're trying to highlight some of the effects of policy. We've got a government shutdown now. We're talking about the folks who are not going to get food assistance, who desperately need it. That's not a political comment. That's just a fact. As government sits and argues with each other and postures, there are real hard effects, and they're being felt in the real estate community, and they're being felt in the labor community. So, ladies and gentlemen, we're talking about the effects of government policy, once again, in an area that a lot of people aren't talking about, that are going to have real economic consequences. John, I talked with a realtor who covers a huge apartment condo area in Washington, D.C., very high end, called the Westchester, which is in northwest Washington, D.C. It's near the cathedral. John, how many units are in the Westchester? Do you have any idea? I mean, it's hundreds.
It's hundreds, yeah.
Hundreds and hundreds of units in there. And this is very high end stuff. A lot of elderly people live in the Westchester, and it's very, very nice. This one property manager was telling me that the big problem at the Westchester right now is that they can't get the sort of nursing assistant home aid care in the Westchester. They had a bunch of folks who would come in and help some of the elderly residents who will now not show up for work. And the Westchester itself is looking at hiring a service, some sort of home care service, who will provide, because they can no longer rely on the individuals who are coming in, because they don't want to come into the district. They don't want to be targeted on the buses. They don't want to be the whole deal. So, John, how does this get resolved? If you can give me just a 60-second, your best 60-second answer as to what has to happen. And before you do, I'm going to go ahead and say, hey, folks in Washington, D.C. on the city council, and hey, Mayor Bowser, if you want to keep collecting property taxes and income taxes from these real estate companies, you've got to let their leases have enough teeth to make sure people who sign them will abide by them. There's nothing onerous, there's nothing negative there. If I sign a lease on an apartment, I expect to pay the rent, and I'm not going to play the system. You're letting them play the system, and you're fiddling while D.C. is burning. But that's Farr's opinion. John?
Well, I don't disagree. I mean, this was created by public policy, this crisis, and it can be solved by public policy. Do they have the political will to do it? I'm not sure. I mean, I'm not certain, having seen a lot of city councils operate, and we work closely with the city council. I mean, there's a lot of good people there who understand the problem, and it is complex because we're dealing with people's lives, but public policy has consequences. And in this case, the consequences have been devastating to this affordable housing community in Washington, D.C.
The most vulnerable, once again, are suffering, ladies and gentlemen. John Ritz is the president of the William C. Smith Company. He's been there for over 50 years. You can imagine what he has seen in Washington, D.C. over his career in every neighborhood, in every housing market, in a major metropolitan area in this country. John Ritz, thank you so much for being with us on the FarrCast.
Glad to be here. Good to see you.
That's it for another FarrCast, ladies and gentlemen, as we cover Wall Street, Washington, and the world, bringing you experts and insiders each and every week to help us understand what's going on in the world around us, the effect of policy, what's happening on Wall Street, so we can better navigate our way and keep each other much more informed. For Harry Jennings, my producer, everybody at Hightower and Farr Miller and Washington, thank you so much for listening. Remember, you can get a copy of the market commentary about the Mag 7, hjennings@farrmiller.com. We'll be back again next week to do it all again with a very grateful heart to each and every one of you. Please share us on social media. In Washington, D.C., I'm Michael Farr. See you next week.
And that's a wrap for this week's episode of the FarrCast. Thanks to this week's guests, Jim Lebenthal, Dan Mahaffee, and special guest, John Ritz. And thanks to you, our listeners. We hope you enjoy the show as much as we enjoy making it for you, and hope that you'll share us with friends and colleagues. Jim Lebenthal's new book, How to Ride the Subway, is in its final editing and currently slated for publication in March of 2026. Here at the FarrCast, we're looking forward to reading it, and for our listeners, we want to make a special offer. The first 5 listeners to email me here at hjennings@farrmiller.com and ask for a copy will receive one, compliments of myself and Michael, when the book is published. I'll keep the list until next year, and once the book is in hand, I'll also do my best to cross paths with Jim and get your copy signed as well. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Spotify, TuneIn, and Apple Podcasts. Please be aware that any time we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. And if we can be of assistance here at Farr Miller in Washington, please reach out to me at hjennings@farrmiller.com. We are here to help, and I'll be happy to put you in touch with one of our investment professionals to help you navigate your financial course across the changing investing landscape. We are grateful for all of your notes and comments, and we try to respond to as many as we can. Please keep those emails and messages coming. We'll be back with you next week with special guest, Retired Admiral Terry McKnight. Until next time, take care, stay safe, and stay healthy. And thank you for listening to the FarrCast. Wall Street, Washington, and the world. Farr, Miller and Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, and a SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr, Miller and Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr, Miller and Washington and Hightower Advisors, LLC and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr, Miller and Washington and Hightower Advisors, LLC and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC or any of its affiliates. Farr, Miller and Washington and Hightower Advisors, LLC or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.